So, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, February 19th, 2022. Good to see all of you here. The market's been in pullback mode on concerns with Russia invading Ukraine, not to mention record high inflation and all kinds of bad politics in Washington and all kinds of reasons to be concerned, and it's obviously taking itself out in the market. Today, we're going to take a look at the S&P, the VIX, and other charts for both day and swing trades. And as usual, for those of you who are watching this on YouTube, I'm only from now on just recording the first 10 minutes of what's a 30-minute broadcast. So to be sure to register at my site at trademastery.com and tune into the live Zoom Saturdays for the entire broadcast. And let's see, we'll get underway. Okay, so anyway, let's start off with the S&P. You can see that we've dropped here. What's the one signal that jumps out to you? To me, it's this hammer, right? I learned from my colleague Steve Nissen a lot, and he's really smart. And one thing that jumps out to me is this is not generating a sell signal. This chart is still in kind of indeterminate range until we lose that low of the hammer. So under 4,200. Be sure to learn candles from my colleague Steve at www.candlecharts.com. I always mention Steve because I'm deeply, profoundly grateful to him because what he teaches works. So I use it all the time, every single day in my trades. I did over $40 million worth of trades last year. And I have screen cap proof on my website at trademastery.com for my Fidelity account. I just got the 1099 last week, so I screen capped it in 40 million plus worth of trades. That's a lot, thousands of trades I did. The reason I say that is because I've got a lot of real money experience, unlike the competitors of mine who don't really trade and they just do PowerPoints and webinars or something. I'm a real trader, so I can teach you the difference between what I found works and what doesn't work. And it's a work in progress. We're always still working on it. Anyway, broad market pulled back. It bounced off this hammer signal. It came back up. It's headed back down again. What we do not want to do is heavily short the market, whether you're buying index puts. So whether you're buying index puts or buying long inverse ETFs like I trade, I'm not going to put on size until we get under the 4,200. So that is the key support level. Is kind of obvious here, but I want it to get under the hammer low before we go short. So I want to see the more S&P get under 4,200. I'm in light size right now, but I flip into heavy size later. You know, that illustrates a very important concept that I've learned in my 20 plus years of full-time active trading experiences. You want to have a light versus a heavy decision in terms of how many shares that is for you, or how many dollars or percent of your account or whatever metric you use that makes sense. So whenever you put on a trade, the first thing that you want to do is start off with a small position. Usually, for me, that's like 50 or 100 shares, really small for a swing trade. If it starts to prove itself right, then I double down or martingale in. I might do a 1-1-2-4 sequence. I might buy 100 shares. If it runs up in my favor, I'll buy another 100. If it runs up more than I was doubled down, I'll buy another 200. So now I'm in 4. And then if it runs up again, I'll buy another 4. So I'm in 8. And you martingale in. And then as soon as it starts to roll over, you sell it all and book a profit. That's the kind of experienced trading approach that you really need to focus on if you're going to make it as a trader. Because you're always going to be wrong at least half the time. I am, but on my most profitable years, and the difference between those and losing years, the most profitable time is always when I'm trading more aggressively and I position size and scale. So that way I don't take much risk per trade, but I do scale accordingly. Anyway, so the point is we short the market if it gets under 4,200. May take nibbles, pot shots at it here next week on a drop. If Russia invades Ukraine, that might be bad for the market. You may want to follow your commodity plays like gold, which has been up lately, and oil, right? Both gold and oil have been up strong. We'll take a look in just a minute. The other key indicator to look at is the VIX, or CBOE Volatility Index, is still way up here at the 28 level. As long as we stay over the 22, I'm a bear, right? Bear, roar. As long as we stay north of 22 in the VIX. So keep an eye on the VIX next week as well. Now, if you take a look at recent plays, for example, gold, if we kind of zoom into the 90-day here, gold's been up sharply lately, as has oil, right? That's GDX and this is UCO. Beautiful charts, right? So flight to quality, people are pulling money, sector rotate or capital rotation out of equities. Money has to find a home, right? So money's going into gold and defensive plays, cyclicals and defensive. So stocks that I like to trade are Oxy, Occidental Petroleum, OxyPete. Halliburton is also a good one for an oil play up at new highs. And a couple of other random charts that folks had mentioned last week that I really like. And thank you, too. Many of you had posted some really good charts. Thank you for that. Like this one. I had not heard of this one, but PBR, Papa Bravo Romeo, currently up here in the 14. I'm going to wait for it to get above this bearish upper shadow. But if it does break new highs, PBR may be a good play. And though pricey, this ECPG chart's been a rock star. It's really ran up nicely. So that's a quick look at some of the swing charts. Now if we take a look at some intraday charts, then we'll go back to swing trading charts in a minute. Our inverse natural gas cold was hot. SQs was good. I was trading SQs all day yesterday. Is anyone else trading SQs or UVXY? Really good charts, right? Especially on Thursday, but Friday was no slouch either. Really nice runs to the upside. So I was trading SQs and my favorite is UVXY. And it did a nice little big run on Thursday, another run Friday, and it's still in a continuous uptrend. Now, I went short the market. I'm only in about maybe 15 grand worth of inverses into the weekend. Remember, we do have a holiday weekend with President's Day on Monday, so capital markets will be closed on Monday, so take the Monday off. Tuesday is the next trading day, and because we have a long weekend and the threat of Russia invading Ukraine and all the other bad news out there, it may be a good idea to go short the stock market finally. So I'm getting back into my inverse instruments as well. Another play for playing the corners is SCO, and we'll look at the ETFs in just a minute. Now here's a good example of a gapper. Someone had asked me about Roku. I'd called it long at the 112, out at the 115 or 114. It did a nice little bounce and then a rollover. Roku is an example of a big gap stock that may be of interest. Ford Motor is also of interest because of the big volatility surge yesterday, right? I don't know if anyone else is trading Ford. I trade Ford. I used to work for Ford as a statistician, so I'm a hardcore numbers guy. And I love the company. It's a great company. Anyway, the stock it ran to 25 and now it's back down to the teens. Probably a good place to initiate a new position on breakouts. So Ford over 18.5. Not a trade recommendation, but something to look at. Hey, before I continue, just a quick reminder. I do have the inverse ETF profits session coming up this Wednesday, and I'm not going to repeat it anytime soon. I only do these very rarely, these one-off sessions, but it's a premium event that's coming this coming Wednesday, and it's from noon till 1:30, and we're covering mostly swing trading the inverse ETFs. I've traded millions of dollars worth of these things, and so I've got a lot of experience with them. You have my word on that. Real money, you can see P&L proof. The point is, you get a month of the live room, and it's non-recurring. It's just a one-time, $97. You get both the live ETF webinar coming up on Zoom this Wednesday at noon for an hour and a half. And then you also, as an add-on bonus, I thought I'd give you a month of the live room for the month of March. So be sure to head on over there. You can type in inverseprofits.com, and that'll take you to this page, or just remember it's trademastery.com/inverse profits. And the whole goal with this is to teach you guys for example, this is TZA, which I trade for a long time. TZA almost doubled here lately as the market did its initial drop. Now, what's next? Wouldn't you like to know? Those are the kind of things that I'll be teaching in the event, so you may want to do that. And here's a good example. Here's a screen cap of my Fidelity 1099 from last week. I downloaded and screen capped it, so you can see I did over 41.6 million worth of trades last year alone. That is a heck of a lot of trading. So I've got a lot of real money experience, not just some people talking on PowerPoint like my competitors. I'm the real deal, and that's the real thing, right? So I had posted one from a long time ago. Anyway, so it's only $97. You have my word, it's well worth it. You'll get a month of the live room, plus And there's no subscription or anything. It's one time $97 and that's it. You get access for the month of March, and at the end of March, your access ends, unless you want to continue separately. But anyway, you get a month of the live room, plus the Wednesday 90-minute session, all for $97. Now, this has been really popular. I know I'm seeing questions. Yeah, a lot of people have been ordering this. I have not yet sent out your Zoom accesses yet. So as so many people order, it's going to take me hours. My goal is to get it finished. I will get it finished this weekend. So all of you who have registered, thank you. I appreciate it. You have my word. It'll be worth it. Look for the Zoom. It'll be a Zendesk support ticket for me with your Zoom access credentials by Monday, end of day. So give me a couple of days to get all the orders processed. We got so many people that registered this last week. If you're not yet registered, give it some thought. You have my word. It'll be worth it. Well, thanks. Right, Trader Mick and I go back and forth between cold and boil, right? That's the inverse, and boil's the directional. So good stuff. Anyway, now we do cover in the live room. I do cover charts like this one. These are all ones that we covered yesterday for our members. ONGY, kind of up and down. NRGB, ditto. DraftKings, drop. CELZ, a nice pop and drop. PLTR. I call shorts too for people. So this was a really nice one. NU, the ticker. This illustrates the importance of using trailing stops. And a trailing stop simply means once it's gone up, you exit the trade if it starts to go back down. Because it wouldn't have done you good if you'd bought wherever it was at the 10.4 and then it runs up to 11.5 and you sit on it and don't sell it up there or on the way up and it comes back down to your entry or lower. That's not good. So one thing you want to do that is good is lock in a profit, at least half the trade at a time. Once you're in a trade that works out, tighten up your trailing stop to 20-30 cents under the inside market. Hey, thanks, Vic. What else do we have? Macy's was up a little bit. I called the short there. One of my traders alerted me to it when it was up here. Now, who can tell me, why would I say to short it there? And even if you don't short, at least it would be a good place to understand where to exit along. So you get both sides of long and short triggers in my live room. The reason they asked me about it when it was a 26.40 or something, I said, that's a short. You short this guy at 26.30, right, on a drop. And that was a great call. It ran down, 60 cents. You're right, Mira got it. Yeah, as always. Yeah, prior resistance, right? So it did a big cup to the previous high. And whenever you have, now the thing about this particular pattern, the nuance is you're looking for vertical or near straight up runs. Those are weak. The straighter up it is, the weaker it is. When you have a straight run, especially to prior resistance, that's a fade on the drop. And that's why I called it and it worked out. Now, if it had been a slow, steady grind up, that wouldn't have been a short that I would have taken. But because it did a kind of 90-degree angle straight breakout and then a drop, that was a good place to get out. In other charts we look at, for example, we look for cup patterns. I didn't draw that straight, sorry. That's kind of like a cup and a handle and the breakout to the upside. So that's a good example of an upward day trading chart. Now if you look back on them, let's flip back to swing trades. We're going to take a look at SARK. Now I'm going to stop the recording now, so for those of you on YouTube, be sure to register for the live events to get the whole broadcast where I go over the best stuff last on purpose, so that's coming right up. So if you're watching this on YouTube, great, but go to www.trademastery.com and sign up for the free Saturday webinar so you get the whole event.